talk about the impact of higher rates on housing sales.
The timing couldn't be worse. Just as the spring housing market officially kicks off this President's Day weekend,
these are really steep risers.
Mortgage rates are moving higher faster, and buyers were already facing higher prices amid strong competition.
There's just simply not enough homes to go around for people looking to buy them.
This $500,000 Denver home went on the market on a Thursday.
I'm good.
And already had 3 offers by Monday, with nearly 100 people touring the home in between.
I thought I was kind of at a higher price point where it would be a little bit easier for me to get a place without a lot of competition, but I've put down 2 offers so far and both times been beaten out by cash offers. This is another bedroom down here.
Now rising rates are also part of the rush.
In the short term, I strongly believe that's going to cause a lot more buy-side demand. As people try to get into a home before interest rates get to a point where they can no longer afford a home that they would like.
The average rate on the popular 30-year fixed moved past 4.5% this week, still historically low, but buyers over the past 6 years have gotten more used to rates in the 3% range. Rates have not been at 5% since 2011. A 5% rate would cause more than a quarter of today's home buyers to slow their plans, according to a Redfin survey. Just 6%, though, said they would drop their plans to buy altogether. About 1/5 of consumers said 5% rates would cause them to move with more urgency, fearing rates would rise even further. Another 1/5 said they would consider more affordable areas or just buy a smaller home. Rates have definitely been volatile and could wobble slightly lower in the short term, but the trajectory for the long term seems to be higher. Spring will bring more listings, but supply is still tight and demand is so strong right now, it's unlikely to take the heat off an already super hot housing market. Contessa?
Okay, so Diana, if you're going to have buyers who some of them drop their plans to buy or buy in more affordable areas, what happens to the rental market then? Are you going to see a big rush into renting?
Well, you may see more people who decide just not to buy a home right now. Remember, rents are incredibly high, which makes it harder to afford that down payment, to save for that down payment. So you may see more people stay in the rental market. And those who can get into the housing market, they're going to have to look in cheaper areas.
So there's a few things that I want to bring up that were in that video. So number one, 1/5 of people are going to go faster because they're afraid that they're going to be priced out of the market. That's really great news for markets in 2018, especially in the spring of 2018 and the summer, and possibly also the fall. But the bad news is, well, once you've gotten over that 20% hump, those people that are rushing to the market right now, you're going to see a slowdown. 6% of the people will simply not buy. That's a 6% decrease in demand, and 25% of them will slow down their decision to buy. So short term, maybe Q1, Q2, Q3 of 2018, good news, right? We're going to see faster sales. We're going to see more overbidding. Beyond that point, when that effect fades, there is definitely a slowdown coming in the market. Now, in areas such as the San Francisco Bay Area, inventory is a much bigger problem. So until the Bay Area gets more inventory, I don't perceive this being a problem. So places like Denver, Seattle, the San Francisco Bay Area, Los Angeles, inventory is really a bigger challenge, and that really needs to be resolved before we see any kind of a backlash from the higher interest rates.